All right, welcome to Electron FX. And today we'll be doing a brief but impactful video on risk management, the key to consistent account growth. I know that many people have been struggling with growing their accounts. They make $10 today, lose 15 tomorrow, make 50 to next tomorrow, lose 100. They blow their account, they eventually fund and all of that. So we want to help people address that issue, right? So that is the idea or the reason for this video today. Before I go into this video, I would like you to use a moment to go to the description of this video and join our Telegram channel. There we post analysis and information that are important for you. So just take a minute to join our Telegram channel with the link in the description, right? Just join it. All right. I want to also show you something in my mentorship program. We have been up and running for about 3 or 4 months, my mentorship program. So I want to show you some of the results that we have made so far, and some of my students have made so far. So, right, so this is my Telegram channel, right? So I just highlighted these 2 results to show you guys and see, so you can see that we are not joking, right? So this was one of my students some days ago. You can see that she posted this. We did a $10 to $150 challenge, and look at, based on the signal I posted, because when you join my mentorship program, I give signals for you to earn while you learn, right? It's not basically the signal program, it's just to teach you, right? It's part of our mentorship program, a free signal group. And look at what was made. She turned $9 to 50 plus with just 2 trades, right? Right. So this is a very nice trade. Look at this other one. This one is a guy. He turned $10 to 60.68 with a day based on the signals I gave them. And I called 2 trades for them, and that is how they made it. Right. So let's go back to charts. So if you want to join my mentorship program, do well to join. Just hit the link in the description, or you come through my Telegram channel. Right, it goes for only $50, which is 25,000 Nigerian naira. Right, imagine a student making turning $10 to $6. That's about it. He made his registration fee with within a day. Was making the fee he paid. I know it's a one-time fee. You're not paying again after that. So if you want to join my mentorship program, do well to join. And we have seen that we have our results, we have something to hide, and that is by the way. Now, let's go to the topic for today, which is risk management. Now, what is risk management? Risk management is simply your ability to manage your capital and grow it to a considerable amount, or to grow it consistently. That means your equity curve, right? That means the equity curve is looking like this. That means your equity curve is growing. This is what risk management means. Your equity curve is going upwards, right? It may not be so straight. Sometimes you may have some drawdowns, but relatively, your equity growth is your equity. I mean, if you have if this is $100, it grew to 150, dropped to 120, grew to 200, dropped to 180, grew to 500, dropped to 300, and like that. That is what risk management is about. Ability to manage your capital, your trading account, to grow in an upward direction. That is risk management. Now, there are 3 basic things you should know about risk management. And the first thing you should know about risk management, these are the 3 keys to risk management. The 3 keys to risk management, right? The 3 keys to risk management. The first key is that you must always look for little drawdown opportunities. So you're looking for trade opportunities that give you little drawdown. That means you're having a little drawdown and large profits, right? So little drawdown opportunities, right? You're looking for trade opportunities that give you little drawdown. The second one is that you must think in terms of percentage, right? So I think that the 2 basic keys to grow your account consistently, things in terms of percentage and not monetary value, or sorry, let me say amount, not value. Amount to do it. And the third one is that you should always have risk. The third one is that have these are the three keys. The predefined risk at trade. Then the three keys to grow your account consistently. You must look for little drawdown opportunities. You think in terms of percentage and not monetary amount, and you have to predefine the risk at trade. Right. Now, these are the three keys to this one. Let's talk about the first one, which is the little drawdown entry. Now, let's assume that we are having a trade opportunity like this. Market did this and did this, and it rejected maybe somewhere here. And now this is an area of resistance, this point here. And expecting the market to sell from that point, right? So now the market is somewhere here. Let's assume that trader A comes and he takes his short here because he can't wait for price to get there. He thinks that it's going to miss out. And look at, and maybe he's targeting here, or he's take profit somewhere around here, or TP somewhere around here, or his TP, right? TP, take profit. Let's edit that format. Right, that is TP regions. Looking at this point for TP, look at its risk reward ratio. It's risking 1 to get 1.62. That means it's risking $10, it's making $16 on this trade. If it's risking $20, it's making about $36 $52 or thereabouts, right? But this is the trader A. Now look at trader B. He waits for price to give him that opportunity to have a little drawdown. Look at, he comes here, he takes his trade somewhere around there. Look at the risk is still the same stop loss, right? It's having the same stop loss with the other guy and the same targets. Can you see this? So let's assume that it's the same risk somewhere around there. Not so perfect. Look at the difference. The difference is that this guy, the same stop loss, the same entry, the same stop loss, the same TP. But the only difference is the entry. The only difference is the entry. So if I drag my to that point, look at this guy is having a 1:6. That means if he's risking $10 on this trade, he's making $60. But this guy is risking $10 on this trade, he's making what? Just $16. So this is the power of growing your account consistently. You must look for those opportunities that give you the opportunity to use little drawdown. You're having good entries. So look for those opportunities that give you, wait for setups to give you that sharp entry, that sharp drawdown. I know that this is more of a technical aspect because the ability to refine your order block or to refine your entries to give you setups is more of a technical aspect, which we teach you in our mentorship program. If you would like to join, we'll teach you how to make little drawdown entries, sniper entries, and all of that. But that is not the goal of this teaching. The goal is to teach you that you can grow your account consistently if you can have trade setups that give you little drawdown like this. You're risking 1 to make ×6. Can you imagine how your account is going to grow? That means if you have 2 of this kind of trade, maybe you risk 10% of your account on a 1:6 trade, right? You risk 10% on a 1:6 trade. If you have that trade ×2, just 2 opportunities, you're growing your account by 120%, right? So now to the A is doing 1:6 and he takes 10 trades. Maybe let's assume that he wins all his trades. That means to take him 10 trades to double his account, right? It take him about about 8 trades to double his account, about 8 trades. But this guy is having a 1:6 trade, just 2 trades, his account is doubled by 120%. Can you see that? So you should look for opportunities that give you that little drawdown. You should not take every kind of market, meaning that you cannot just take a sell here. You should always wait for the setups that give you the little drawdown, and then you can have your large reward. That is making your entry to be spot on, and you're having a large reward ratio. That means with this kind of stuff, your wins will be more valuable than your losses ×10 or ×6 places, right? ×6 is the right word. So this is the first key to little drawdown. Always look for opportunities. This is the first key to grow your account consistently. You must look for opportunities that give you that little drawdown. And this is more of a technical aspect which you can teach in our mentorship program if you care to register. All right. You should look for opportunities that give you little drawdown. And the second one is that you should think in terms of percentage and not monetary amounts. That means whenever you take your trade, you should be thinking, how many percent can I take my account up? How many percent am I risking, right? So let's assume that you have $1,000 account, right? You have $1,000 account. Let's do the math. You have a $1,000 account and you are risking 10% of this account on every trade, risking 10% of the account. And let's assume that you won 3 and lost 7, right? Let's assume that you won 3 and you are using a risk reward ratio of 1:3, 1:3 R, right? 1:3 risk reward. That means each trade you trade, each trade you take your times, you're getting times 3 of each of your trade. That's risk reward ratio. That means each trade you take, your TP is always times 3 of what you're risking, right? That's what RR means, risk reward ratio. And you can always see it on your tool, on this tool, on this short tool, right? So now let's assume that you want 3 trades using this approach because you're thinking in terms of percentages. Now look at what happened. Because you're using percentage and you're using good risk reward ratio, you want 3 trades. That means each trade you won was $300 times 3. That means you made what? $900 on this trade. You made $900 on this trade. And then you lost 7. That means since you are risking 10%, you 1 times 7. That means you lost what? You lost 700. Right? You lost $700. That's what you lost. You can see that you're still in profits of what? $200. Can you see this? That means you mustn't win all your trades to be profitable. You just have to use a good percentage. You should be thinking in terms of percentage, and you see that your account is going to grow remarkably if you apply this. Always, no matter how big your capital is, no matter how small it is, always think in terms of percentage. Oh, I'm risking 1%. I want to make 3% everything I take, and that way you grow your account consistency, right? If you're doing this consistency, 1:3, you need just 3 trades that to play perfectly to double your account. Just 3 trades about 4 trades. You've seen that your account is growing remarkably well. You're losing 7 trades and you're winning just 3 and still making profit. You see your account is growing considerably well. So don't be thinking in terms of money. Maybe you're in a trade, you move $100, and that $100 is not up to 1% of the account. You want to lose your profit. No, that's not the trade. Always risk in terms of percentage, right? You should think in terms of percentage. Your trade should always be percentage based, not money based. Not I want to make $5,000. I want to make no. You should always I want to make 10%. I want to make 20%, and that way account is going to grow remarkably, right? So next point. Always have a predefined risk per trade. Always have a predefined risk range per trade. That means you should never risk above this amount and you should never risk below this amount. Right? You always have a predefined risk range. That means if your maximum risk is 10% and your minimum risk is less than 3%, that means every trade you take, you should always take not the one as you risk 5% today, the next day you're risking 20%, the next day you're risking all your accounts, the next day you're risking 5%, today you're risking 1%. No, you must always have a predefined risk range, meaning that you should never exceed a particular risk amount. If possible, you can make your risk specific. That means each trade you take, you're risking 10%. Each trade you take, you're taking 10%. That's way you grow your account consistently. And another thing I want to point out is that the bigger your account, the bigger your account, the smaller your risk percentage. Right? This is very important. Very, very important. Because you must have respect for money. You must have respect for money. The bigger your account, the smaller the risk percentage. That means if you have, let's assume that you have $1,000 account, and you risk 10%, you're risking just $100 on a trade. You're risking 10% of this. You're risking $100. Now let's assume that you have a $100,000 account, and then you come to risk 10%. You know that you're risking $10,000 on a single trade, which does not make sense by any standard. It doesn't make sense to be risking $10,000 per trade. No. The higher your account, the smaller your risk. Because now, if you risk 10% and you win the trade, maybe you won 30%. Maybe you risk 10% and you won 30% of this trade. That means you're making what? You're making $300. That is your profit target is now $300. Right? If you risk 10% and you win 30% based on 1:3 RRR, right? This is based on 1:3. So you have won $300. But if you risk 10%, now let's assume we reduce our risk because the account is bigger now. Let's assume that we reduce our risk. So what? 1%. And 1% of this is what? 1% of this is $1,000. Yes, $1,000. So we'll assume you win that 30%. So you won 3%. 3%, sorry, 3%. Because of now you're using a smaller risk. You win 3% of that trade. So now you're winning how much? You're winning $3,000. For instance, the profit is quite bigger, even though you're risking small. So you must always have respect for money. When your account grows bigger, you should be risking far less than what you are risking when your account is smaller. That means if your account is $100, you should be risking far less. You should be risking 1% of your account, meaning that it will take you 100 days to blow this account. But you can afford to blow $1,000 account, but you can't afford to blow $100,000 account. You can't afford that. So to protect that capital, which is risk management, you have to reduce your risk appetite, reduce your risk percentage to the barest minimum, because now the profit is as big as the loss would be. That means if you lose a trade, you're losing $1,000 per trade. Imagine losing $1,000 per trade with the current value of money. So you should always have that back of your mind. You should have a bigger account should risk far less than a smaller account, but you should always use what we call risk reward ratio, right? So this is the text I want to mention, and that is how to grow your account using risk reward ratio. I was able to grow my account from $70 to 200 and something. It's about 180% in just a week using this approach. I was targeting little dollar opportunities. I was not taking all kind of trade. I would wait for trade. I would put my sell limit here. If it does not come to where I can get my little dollar, I won't take the trade because I wanted to grow my account using this approach. So you should always have in mind that you should not trade all kinds of setup. Always trade setups that give you little risk. Always wait for price to come to a place that you have your small stop loss and a large profit. Always think in terms of percentage and not monetary amount, and always have a predefined risk range per trade. And this way, you see your account, your equity curve grow massively. All right. So this will be the end of this video. If you have any question, do want to drop it in the chat in the comment box. Do want to use the link to join my Telegram channel. Like the video, share it if this has helped you, and God bless you. If you are interested in my mentorship program, we teach you how to trade. We hold you by your hands. We coordinate for you until you become profitable. You grow your account with us, and we take you. It's a one-time payment, a lifetime mentorship, and it goes for only $650, which is about $2,000 in Nigerian. If this price will be on till the end of this year, so do well to register if you haven't. We are having student influx every day, and by God's grace, we will make sure you don't regret it. Look at my students has made more than what they paid for. Most of them have made times 3 or times 5 of what they paid for to join my class. It's not about the money. It's just a way to get dedicated so that you can partner with the vision, which is to grow our accounts consistently. So this is the end of the video for now. If you have any questions, do to drop in the comment section, and cheers and God bless. Right? Have a nice day. That is the end of the meeting for now.